What we're doing is we're focusing on corporate housing. Corporate housing is your traveling nurse, your traveling software developer, your somebody in oil and gas, military, sports and entertainment.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's show on Wealth Strategy Secrets. We've got another great show for you today. Today we're joined by Gary Wilson. At age 40, Gary retired as a corporate VP in mergers and acquisitions in national banking. He completed over 100 transactions per year consistently every year without a sales team or assistant. He's also traded over 5,000 investment properties in less than 5 years. Further, he authored 7 real estate investment books, including a few of the well-known ones, The Massive Passive Cash Flow Method, Flipping for Profits Without the Risk, Rental Profits Without the Pain, Investor Agent, Make More Money, Not More Work. Gary's also a founder, trainer, and coach of Path to Profit System, teaching more than 20,000 agents and investors in nearly 1,000 speaking engagements. And he's also appeared on over 100 national and local media outlets, including major outlets such as CBS, Fox, NBC, and ABC. Gary, welcome to the show.
Thanks, Dave. I appreciate you having me, and I appreciate the opportunity to serve and help others too.
100%, Gary. I know listeners are really going to enjoy today's episode. As you know, we talk a lot about wealth strategy and coming up with really alternative ideas, really, hacks on how to create, wealth versus alternative conventional wisdom that's really out there. And what struck me about you is, you're just really such an innovator in the space, right? And real estate, it's been around, for so long, but you definitely solve, a few of the problems I think people are looking for. And I think people are going to get really excited about that. So without further ado, why don't we jump in and, talk to us about your background. You were in banking, and how did you get into investing in real estate?
Sure. Well, the early years, I actually had two opposing influences on my experience when it came to money. My mother's family was more the employee. You work until you retire, get Social Security, have a pension, and just basically sit in a lounger for the rest of your life and see the grandkids, and that was it. And no savings, no investing, just, the company's going to take care of me. The government's going to take care of me. On my dad's side of the family, they were the opposite. I mean, going back several generations, entrepreneurs, farmers, merchants, business owners, and some of them quite well to do. But my grandparents, having come through the Great Depression, they were still very tight with their money. I mean, like saving scraps of soap and reboiling them to make them another bar of soap. And when they passed away, they were multimillionaires. So I just had this really crazy programming going on. I had to unprogram. But thank God I had a great roommate my college freshman year. His name was Socrates. His dad was a Greek immigrant. And when Sock and I graduated, we were going to go, of course, rent a place. We were living at the beach. So we're going to go rent a place down by the beach and live the good life. We both had our first professional jobs. And his dad said, no, you're not going to rent, you're going to buy, and I'm going to help you do it. Now, he didn't give us any money. He didn't give us the fish. He taught us how to fish. So we bought a property, 4-bedroom, 2-bathroom ranch in Virginia Beach, Virginia, about 5 minutes from the ocean. And we assumed the owner's first mortgage. You can still do this today, by the way, for all the listeners. You'll have people say, well, you can't assume mortgages anymore. It's not true. You certainly can, certain types of mortgages. So we assumed his first mortgage. We refinanced his second. He had a second. And then we gave him a third note for the remaining equity. So it was creative financing right out of the gate. And we do what now people today call house hacking. We had our own bedrooms. We had two other bedrooms we rented out to two other guys, and their rents pretty much covered our costs, or other than like $50. So I'm sold. I'm thinking, okay, well, let's do more of this. And of course, I got married, moved to Pittsburgh. And I remember when we bought that property, Sock's dad, at the closing table, he said, we're going to go to the beach house and celebrate. So we went to one of his beach houses. We're on the deck and he's pounding his chest, saying, if you boys do what I tell you to do, you won't have to work for anybody else when you're 35 years old. Well, I didn't listen. I let 10 years go by. Started a family, had a corporate job, and learned I was not born to be sitting behind a desk in a corporate office. I mean, it was like dying spiritually. So I decided I'm going to do what Mr. DeBet taught me. I'm going to start investing. And I did, and built up a portfolio. And in 5 years, I was able to leave that day job and focus on investing. And so this was a great thing for listeners to write down or just remember and write down later if you're driving. I had a model that I came up with my own. And my model was I wanted to have enough capital to be able to manage at least 4 jobs. In other words, buying a property, remodeling it to put it at a higher level of production, and then rent it out and refinance it. So if I had capital to do 4 jobs like that, and I had the income from the existing properties to meet or beat my corporate income, I would retire. And that's exactly what I did. I could have retired within a year and a half if I wanted to, but I wanted to be in a really solid, stable position because, guys, I had, 5 weeks vacation. I was, reporting to the executive level of a major bank. I don't want to give the name, but they're one of the big ones. And 401k. I mean, I had a great office. I had people, 10 different business applications I was running. And it was, you'd think I was like, had it made, but I was not happy. That was the key. I just couldn't take it anymore. So I left and started focusing on the investing full time. So I'm going to give everybody another formula here that I followed to help me really grow a portfolio. What I did is I did not trade up using like 1031 exchange because I studied that. I understood. I mean, I felt a lot of people do that, but 1031 exchange is not perfect. It has some inherent drawbacks in the design. And I didn't like the restrictions, like a 45-day window to identify new properties if you trade up, and a 180-day window to close. Well, that's extremely tight, especially if you get bigger properties. So what I did is I built like a pyramid. So the foundation was all those early properties that I went through a disciplined approach of paying. So I buy the first one, I would take the excess cash flow and start paying down the principal, like making extra payments to build up equity faster. And then I would get a line of credit on that property to make a down payment on the next property, and then quickly pay off that line of credit and do the same thing with that. Now I had 2 properties with equity. And I got to the point after the 10th property, and this is going to again ruffle some feathers here, but because people will say you can't do that, and I did it, which was get a commercial line of credit, a business line of credit across the equity in my 10 existing properties. See, most commercial lenders, Dave, they want to refinance the entire package and start scratch, so they're in first position. But I didn't want to do that because I already amortized these properties down a good bit. And so I found a commercial lender. He said, no, I'll do the deal. So he did. So you can imagine across 10 properties, that was a substantial amount of equity. It allowed me to buy the next property for cash, which was a big, this was the turning point. So now I had a bigger property that I paid cash for that I was able to get a brand new first mortgage on it. And I did it in the form of a business line of credit that I could draw on, buy another property and pay it down, draw on and pay it down over and over again. And that was really the key to success. Does it happen overnight? No. But does it happen for sure? Absolutely. So the key here is to not be too hasty and not be too aggressive and stretch yourself out so thin that you're leveraged up to your eyeballs. Because the market, the business, the world of the economy is always going to be cyclical. It's going to go up, it's going to go down. It's never going to sit sideways. It's either going up or going down. So when it goes down like it did in 2007 through 11, it could be painful. For me, we actually thrived in that time frame because we already had a lot of equity. We had a lot of properties, and we were cash flowing. And you'll find out in a recession, as long as you have the right kind of properties, you'll have more people wanting to rent them because a lot of what would be buyers are no longer buying because they're knocked out of the market. So we were well positioned where other people were losing their shirts. We actually grew sixfold during those recession years because of that disciplined approach. Um, so I wanted to start with that. And, and Dave, if you have questions, just tee me up and let me know. I don't mind sharing anything that I did to help people. I mean, I will tell you, to kind of preface the second part here, is I did actually build a brokerage company because I had all these other investors. I started teaching, by the way, for another person, how to teach people how to buy, rentals and manage them and flip homes. And it led to me to building a brokerage company to teach the agents how to work with those investors, because that was one of the big um, challenges in investing in real estate is most agents, at least in the residential world, are not able to help you. They're wonderful people, but they're only trained to help you and I buy our own home. You've got to go to commercial to hopefully find agents who know how to help you investing. But believe me, in commercial, their motivation is getting as big a commission as they can get. They don't care how you spend your money. I hate to say it that way, but that's what I found out. So on the residential side, there was no training, no development for agents to learn how to work with investors. And that's what we did with my brokerage company. And I since had sold that company and started training on a national scale for another company. But back to what I was saying, the reason that's important, guys, is you want to have multiple streams of income. Investing in real estate is a foundation upon which you can launch other businesses. Okay. That's how I saw it. And that's exactly what I did. It wasn't like, um, it was fun. I always enjoy it. Believe me, I love the thrill of the hunt. But when you build a business, it gives you a lot more benefits. So I built 7 businesses over the years, all related to real estate, and 5 holding companies to own the properties. But it all started because I bought that one little ranch home. I only owned half of it with Socrates. I started there and built up using those disciplined approaches. So in any case, is that
Yeah, no, I really appreciate that story, Gary. I love hearing stories of entrepreneurs and seeing that, inflection moment. And, we talk a lot about getting crystal clear first, on your vision and, what does it really mean to you, right? To be able to build wealth and everything, because real estate is really just kind of the vehicle. But clearly, you had been doing well according to societal standards, right? And where you were in your career, but you really took that courage to step out of that comfort zone and go into something completely new and everything. So I really encourage, listeners, if you've got a great idea or whatever, take that first step, take action, because it all starts right there. So first of all, kudos to that. I think that's really great. And, next, I mean, let's just talk about lending for a second. And, you come from the banking background, which is really powerful, how you were able to transition that, into the space of real estate. And what I've found in the space of, lending and doing, different deals and everything, and even on the residential side, right? It's really interesting because, the majority of lenders, they just have this cookie cutter approach. And they're looking for a certain set of metrics that they want to shove you into this box. But you have to be able to, take 99 no's before you get the right yes, because money is money. And somebody will lend you the money, right? If you have the right, principles in place, you're trying to do something creative, I think that you can get there. And I'm seeing that now, even with my kids, right, who are, just post college and trying to figure out lending, but they don't have, this W-2 track record and all these kind of things. So, you can bend the curve and find people out there. Any other thoughts on that from your perspective?
Yeah. I got to tell you guys, when it comes to the financing part of it, I will tell you it's one of the 3 legs of a 3-leg stool. You have to have the financing. So while I was, going back to my formula and my model, I want to give you my ratios. Okay. So first off, when you're building a real estate portfolio, it's expected you're going to be highly leveraged. There's some market cycles where people are 90, 95% leverage. This is my own personal opinion, but I think that's too much. Not that it can't be done. It certainly can be done. The challenge is you may be building a big portfolio, but your downside risk is increased because if something happens, if something goes wrong, if you lose a job, if you get a divorce, if someone dies, um, or if you have a major lawsuit, anything at all, or the economy, like the last recession, thankfully I had a pretty solid equity position, and some of our properties did struggle, but for the most part, we had better properties in better areas that actually did well. So what I'm getting at is back to the original thought here is you want to watch your ratios, and I know it's tempting because you will find people who will loan you money up to even 100% sometimes. It's crazy, but they will. That is redlining, and all it takes is a couple of missteps, fires at your properties, even with insurance. It's going to cost you money to really knock you off the horse, and it's painful. Okay, and for example, I did go through a divorce. In the middle of all that, actually broke my back in two places. So I was not even I couldn't walk, which means I couldn't drive. They literally took my driver's license away. You know, and that was in the middle of the worst recession in 80 years. And I'm thinking, oh dear Lord, what up? Please just get me to the next moment. And whatever I did, I'm sorry. But in any case, here's the ratios. Two ratios. The first one is on the ownership, the asset liability side. And my recommendation is this: that you don't owe more than 2/3 of what you own. So if you own 10 million in income producing assets, i.e. real estate, don't owe more than 6.65 million. Now, I'm going to give you a little qualifier here. When you're in a growth phase, you're aggressively growing, and rates are low, and the money's flowing. Yeah, go ahead and borrow 80%. Make sure you've always got your 20%. That's my threshold. I do not violate that. Put down 20% minimum, okay, and finance the rest. If you do that, you'll get better rates and terms, okay. And then quickly, what you want to do is you should always look for value add properties you can increase in value by remodeling or adding on, whatever the case is, putting in storage, adding laundry, you name it, okay. Increase the value so you can increase the rents. So when you increase the value through remodeling, for example, you generally get a bigger payback on you put in, say, 100,000 in remodeling, but your value will go up 200,000. Well, the income is what's really important to the bankers. So on the bigger properties, particularly, it's all about the income. It's used actually called the income approach to valuation. So I'll give you a quick description of what that means. Let's say you have 100 units, 100-unit building, and you raise your rents by $100 a unit. That's $10,000 a month extra, and $120,000 more a year extra income. All right, and that's all. Goes right. It goes. It's top line income because your expenses don't really change that much. Okay. Well, what happens is when you look at the valuation, you're trying to, like, say, you look at a cap rate or a cash on cash return, which is what the banks do. All of that goes to value. So if you're at a 10% cap rate area, that means you just added, if you have 120,000 more income coming in, you just added 1.2 million to your net worth. That's major. That's a huge impact. Okay. Now, on the income expense side, my ratio is this. It's the opposite. You don't want to owe on a monthly basis on principal and interest payments. You don't want to owe more than 1/3 of your gross income. Okay. You can make it, say, 1/4 of your net income, but I just use 1/3 of your gross income. You'll always be in a good position with the banks. You won't have to call the banks. The banks will call you. And while I'm not afraid of getting private money, I've done that. I've done hard money, private money, both directions, giving and receiving. Okay, or lending and receiving. Excuse me. I never give money away unless it's a charitable thing. but in business, it has to be exchange of value. So in any case, what I'm getting at is, as long as you maintain those ratios, you'll never have a problem borrowing the good money at the low rates and the best terms. Okay, big bank money is always going to be cheaper than private money. Flat out, hands down, no exceptions. I know people will tell you, there's gurus out there that say, don't ever use your own money, always borrow other people's money, get private money. I'm not against that, if that's what they want to do. What I'm telling you is, when you have the right ratios, you can get money less expensively. Okay. Um, and at the end of the day, I do operate pretty much on a cash basis because I'm always replenishing what I put out there through refinancing. All right. And I maintain my ratios. But the guys, if you maintain those two ratios, be disciplined about it, put on the blinders. Sometimes you got to block out the late night gurus because they're going to sell you a no money down package for $10,000. But the only reason they're doing that is they know majority of people, when they're asked about money, they're going to say, I don't have any. How do I invest when I don't have any money? I don't have enough income. I don't have any savings. I need all my income to pay my mortgage and my rent and blah, blah, blah. It's a mindset thing. It's the state of wallet reflects your state of mind. So what I'm getting at is, don't be one of those folks. Be disciplined. All right. Be smart and be wise, and you will attract the good money. And when you buy the right properties, right, not the cheap, crappy stuff. I'm talking about nice properties, not A-grade luxury, but B level properties. You'll always get the financing will find you. The financing will follow you, and you get the better rates and terms. So sorry, I feel like I'm preaching, but that's a
Yeah,
really
no,
serious
no,
subject.
that's
Yeah,
yeah, it really is, and you've got such a good prerogative, really coming out of that space and also being in the trenches and everything. So appreciate that.
yeah,
I think why don't we transition? There's really so many avenues we can kind of go down, Gary.
yeah.
But why don't we frame everything up for the audience, and why don't we just talk first about your personal wealth strategy,
Okay,
and what your vision is for that.
sure. Well, first, let's talk about real estate. What we're doing now going forward is we're not doing traditional rentals. Any new purchase, it's not going to be for the family living there for a year and cutting the grass and all that stuff. What we're doing is we're focusing on corporate housing. Corporate housing is your traveling nurse, your traveling software developer, your somebody in oil and gas, military, sports and entertainment. They all need short-term housing, 1 month for between 1 month and 12 months. You'll get generally on average 2 to 3 times the rates that you would normally get for a traditional rental out of that. Okay. So the upside potential is increased dramatically. The downside risk is reduced dramatically because these people are not coming with their children and their pets. They're coming to work for 9 months. And that's all they're going to do. They're going to go to work, come home and sleep, go home and visit their families on the weekends. So very little wear and tear on your property. Often whoever they're working for on a contract basis will pay their rent for them. So you have no collections to worry about, and you don't have to worry about evictions because they're going to leave. They're going to take the next contract. So you get less wear and tear on the property, less headaches, less work. And by the way, in the pandemic, I'm sure everybody saw there was a forbearance on mortgages and a moratorium on evictions. It's particularly states in the Northeast like New Jersey, New York, and out in California. Horrible for landlords because the forbearance on mortgages, guys, only apply to owner occupants. If you had a non-owner occupied property, i.e. rental, you still had to pay your mortgage. And yet the courts are like, well, sorry, you can't evict those people because we're not allowed to. That is horrible for owners. So we're only buying in the states that are business friendly, okay, like Florida, okay, South Carolina. I'm just giving away a big secret here. South Carolina is where we've got to focus for the future. It's been relatively untapped, and nobody's paid attention to it until now this podcast. So, but now, in order to fund that, here's what we started doing. Being that I was in banking and I did mergers and acquisitions, prior to that, I worked as a contractor for the Navy with a top secret clearance chasing Soviet subs. So before that, out of college, I worked at NASA, Langley Air Force Base on the space shuttle program. So thankfully, I've got some skills at research and analysis. So what I started researching is the crypto world. And I know right now, half the people are saying, yeah, please tell me more. And the other half the people, they were like, oh, crap, here's another one of these guys. Guys, I'm telling you, you need to embrace it and take it seriously because it's here and it's here to stay. And what they call blockchain processing is no longer going to be just in the crypto world. It's also going to be in the world of title. Every time you buy a property, that title insurance is now going to be on the part of the blockchain. Okay. Retail businesses, restaurants, pet stores, all going to the blockchain. All right. What they call Web3, i.e. the metaverse, is the next generation of Facebook and all that. So everybody was on Facebook for a generation. Well, now the metaverse is going to be like Facebook on steroids. And just like in Amazon, people will buy products and services through the metaverse. So make sure you're positioned, because this next wave of evolution and innovation is going to be probably on the scale of the industrial age and the information age. All right, computer age, technology. This is big, guys. And I know there's some scary stuff out there. Believe me, I read and study the news too. But I'm telling you, I'm in it, and I'm doing pretty darn good. So we're taking those earnings and funneling into the real estate for the corporate housing. We do Airbnb is a great way too. Airbnb is awesome, by the way, but that's short-term vacationers typically. We're talking about the corporate travelers. That's the market. It's the fastest growing segment in the real estate industry. So we're combining multiple strategies here that work with each other. And I could go on and on, Dave, but you having an IUL, Index Universal Life Policy, could be a critical part of your financial plan. Gives you lots of benefits, protects your family and your estate, and you can borrow against it, and you can have an annuity component to it that gives you passive income tax free long term. That we could talk on another whole session just about that. And by the way, being involved in mutual funds for growth stocks, so you get the dividends. You don't care if the market goes up or down, you're still getting dividends. And things like utilities are probably a pretty good thing to do too, to have your balance, have a balanced portfolio that's diversified. But I want to come back real quick to the crypto. Here's how you want to get in before it gets in what we call mass consumption stage. Right now, it's an early adapter stage. Fidelity Investments, one of the largest on the planet, just announced right before Christmas that they now have a trading platform for you to trade crypto. We already know JP Morgan is buying up huge chunks of crypto. They're saying publicly, the CEO publicly saying, we really don't know much about that, but we can tell you by looking at the data, they're buying giant chunks. China owns the largest share of crypto than any other entity on the planet. And yet they're telling their citizens, no, you can't be involved in crypto. And yet the country owns the largest share of Bitcoin. They're also the largest miner of gold, by the way. And I'll leave off with this, so we can have more questions. But gold is the one true tangible asset. They're not making any more of it. All the gold that's been mined in the world, it will fit in less than 2 Olympic-sized pools. Okay, so in any case, you could use that for a hedge also if you want. But at a minimum, have at least three things, guys. 3 things you're doing, and unrelated, diversified, and you should be okay. And if you can do it where they can feed each other, like I do, that's even better.
What if everything you thought you knew about investing was wrong? Would you like to create a wealth strategy like the top 1% have and get exclusive access to top private equity deals that provide downside protection, tax efficiency, predictable cash flow, and have a lucrative upside? Discover how with the Pantheon Advantage and join our investor club today at pantheoninvest.com.
So that's big picture.
That's great, Gary. I mean, really big picture. Yeah, I think we could do basically an episode on every one of those areas. Yeah. We're a huge fan of the infinite banking concept, and we're helping clients with that. So that's a really nice hedge. Does a lot of things. Gold, there's definitely a place for gold and precious metals, especially in this environment, right, with fiat currency and things like that. So I like your holistic view, right, of having a portfolio that is diversified in different things. And then also in businesses, it's really interesting how, you've been able to create basically synergies between the different businesses that you do. And having created a few businesses over my years, you see the people who gain the most momentum by having that synergistic effect, right? Because it really becomes a multiplier versus that, shiny object syndrome that most of us entrepreneurs say, like, hey, there's a great franchise or there's another business model that I could create, but it has absolutely nothing to do, with their current ones. So I think that's really, powerful. And maybe that's a good segue to, if we were to really jump into, again, like a lot of topics we could really cover here.
Yeah.
But one thing that I found, really innovative and just really great about what you're doing, because I actually felt this myself. I mean, when I tried to transition into, I was doing passive investing, but I also thought, okay, maybe I'll start a single family portfolio. I mean,
Mhm.
I tried probably 3 different times in my life to get into it. And it just always seemed to me that, okay, there's really a lot of competition. There's people who are, eat, breathe, and sleep, this, right? So, are my assumptions actually correct,
Mhm.
in a particular area? If there was a property on the market that, you were even looking at, it was probably too late. You needed to identify, off market type properties and everything. So then to me, the risk actually always seems really high for getting into some of these things. So, please talk to the audience about what you've done, which I think is so cool, on training other brokers, for the investment space to help people out with this.
Yeah. Well, I appreciate you bringing that up because it's really my passion. I mean, you really have to love people to do something like this, and you have to have a servant's heart. Um, but in the early days, when I was really getting into investing and I had to use agents, I realized, like I mentioned earlier, there was a real lack of expertise there. And again, please, if you're an agent, please know this. I'm saying this from love and respect because I also have a license. I have real estate licenses in 3 states, and I'm a broker in 3 different states, and we operate across the entire country. But what I recognize is your brokers and mine were not teaching us how to work with investors or how to invest ourselves. It's a completely different mindset than owner occupants. It's a different set of terminology, different methodologies. And if you're not trained in that, you're by default you're using what your broker's teaching you, which works with owner occupants. And if you try to use that with investors, it's not going to work. If you've experienced it, it's frustrating for you, frustrating for them, and they'll treat you like dirt. I mean, they don't think a lot of agents. Okay, what's different though is if you're what we call an investor agent, and you actually do know how to identify, analyze and negotiate on and off market deals. I promise you'll have more investor clients than you know what to do with. That's what we did, Dave. And it wasn't like it was my life's passion. I just stumbled across it. I thought I've got to solve this problem. And my gosh, did it take off. I had my own brokerage. Initially, I built my own brokerage because I was working for somebody else, and they were typical old brokerage. No, just do it our way, do it this way, do desk time, do cold calling and door knocking, all this stuff. And I'm not saying that stuff doesn't work. It's just very hard work for very little pay. But when you do things the way we do it, so we have what we do, Dave, is on our team, it's a national team. We're in 36 states now. And I bought a program that gives us access to every property anywhere in the country, in the U.S. We have clients in 13 different countries, but they all invest in the States. So residential, commercial, doesn't matter. We know the property, everything about it, and we know the owner and everything about them. And I know that may sound scary to people, but in the U.S., we have what's called the Freedom of Information Act. So we can access all that data. Some of it you can get for free, some of you paid. With us, it doesn't matter because we bought an entire program that does all that. It's called data aggregation. So at our fingertips, we can see what mortgage you have, who you have it with, how long you had the mortgage, how much you owe. We can see if you're behind on your property taxes. We get all the usual stuff, bankruptcy, foreclosure, probate. Everybody gets that. But we get a lot of details that allow us to really think about the mindset of the owner of the property. So we're not chasing ambulances. We're not looking to take advantage of people in distress. What we're looking to do is find people who are in a position in life where they're more likely to be interested in selling, like long-term owners. Okay. There's a little hint there. If you're an agent, write that one down. Okay. So what we do is we approach the owners using specific messaging that matches them, matches the market, using specific media that market's most likely to respond to. Think about it. Some people like emails. Some people like texting. Some people like Facebook. Some people like LinkedIn. Some people like watching YouTube videos. Some people just like a regular old phone call. Well, we know demographically which group of people are more likely to respond to which type of media. So we use that media, and then the message in the media in the market, all three are in alignment. And that's how we have such high conversion rates. So we find the inventory for our investor clients, and we help them to analyze and negotiate. We got all the tools for analysis and negotiating, and that's really why it grew. We just started that team, by the way, 2 years ago, and we're already in 36 states. And we're inside of another brokerage. It's not like I'm running a brokerage anymore. All I've got to do is focus on training the agents to be productive with the right kind of consumers, the right kind of investors. And we certainly work with owner occupants. I mean, that's part of the business. In fact, we even do commercial work. We've got some pretty big projects going on around the world right now: in India, Mexico, Canada, of course, the U.S. Anywhere from a duplex up to a $800 million development project. We have that. So if you're an agent listening to this, or you've thought about getting your license, just you can look me up. I'm in the public eye. Just look for Gary Wilson. There's other Gary Wilsons, but you'll see the Gary Wilson in real estate. We're happy to speak with you about that. If you're an investor, you definitely got a place to find the right kind of investor agents. Okay, don't just use your neighbor's nephew because he got his license last week. That's going to hurt you. He's probably a wonderful person, but you need somebody that's actually trained and coached to serve you specifically with investing the right way. That's one of the keys. So financing is one of the three legs. Your team, which is your real estate agent, your contractor, insurance, all those guys, that's your team, right? And the third leg is you and your heart and your mind. And you put those three good things together, you're going to have a successful portfolio. So you mentioned single family homes, Dave, and I've done a bunch of those. But I will tell you that one of the best ways to get started in real estate is start with small multifamily, right? Fourplexes, triplexes, duplexes, different market, but the ratios are much more in your favor. The cash flow to cost basis are much more in your favor. So we start off both of our investors, unless there's some extenuating circumstances, with those types of properties. Now we have some clients that start off buying, and one guy bought a 94 unit building right out of the gate. So we basically look at what you have and where you're looking to go, and match you up correctly with the right agents and the right training and marketing and so forth. And it doesn't even cost you anything. The agents are the ones that pay for all this. They, through their commissions, they pay for their own coaching and training. And you, the investor, get the benefit from it. And but I do want to tell you what, if you're an agent out there, I know what it's like, and I know what the market's doing. Everybody is pretty obvious, volume's down, and don't let anybody try to tell you otherwise. No market lasts forever. This one's been going for quite a while. And when you jack up prices aggressively for a few years, and you follow that with not one or two, but 4 and 5 increases in Fed rates, it's going to chase people out of the market. Your demand is going to drop. It's a mathematical certainty. We're heading into a recession. Can't tell you how wide or deep or long, but just know this: it is going to happen, and it's already started. And if you don't want your business dropping, your owner-occupant business will drop. Like in Texas right now, volume is down 35%. That's a statistical fact. That's hard news for a real estate agent. Listen to this. But don't worry. Just go to the globalinvestoragent.com, click learn more, and you'll see how to not just survive but thrive in this market. And then the investors is the secret. And Dave, here's what's interesting. Everybody would tell you volume has been down, and it's true. Just like I mentioned, in December, volume is usually down because of the season, Thanksgiving and Christmas, right? The volume on our team actually increased in December. I've never seen that before, but it's because of the investors we work with, The investors, when the owner occupants move out, the investors move in, So, in any case, sorry to ramble there, but that's such a critical thing,
Yeah, really, really great nuggets. Really appreciate that wisdom, Gary. I guess in the interest of time, so many things really to unpack, but I guess if you could give listeners really just one piece of advice about how they could really, change the path of their wealth trajectory and really accelerate that, what would it be?
Yeah. Well, I tell you what, here's a good one for you. Most people that are listening to your podcast, I'm sure, are already well positioned, financially. They've got some investments, they've got a good career, they've got a home. So if you're looking to get into real estate, guys, I would encourage you to keep every piece of property you ever buy. Okay. Just look at what's happened in the last 10 years, from the Great Recession to this great bubble. I mean, property values have doubled in most parts of the country. And over time, they might not have doubled like that every 10 years, but they will always go up. So use real estate as the foundation upon which you leverage other things like other businesses. Okay. But the key here is keep your properties. I tell you, I've never regretted buying a property. I've gotten a lot of gray hair from some of those properties, but they always made me money. And I will tell you though, I have sold properties, and every one of those ones I sold, I wish I had right now. So keep the properties you have. Use that as your foundation upon which you can build other things through leverage.
Excellent. I really appreciate your time today, Gary. So many insights there. I think that was really valuable. If folks want to learn more about what you're doing, what is the best way they can reach out or connect?
Well, really, the latest book, it's the eighth book. It's actually already outperformed the prior seven books. I guess it's pretty good. It's called Global Investor Agent. Okay, and then the caption is, how to not just survive but thrive in today's market. It's written for agents. In fact, I wrote half of it, and 8 of my agents wrote the other half on the team. And I didn't pick all the top performers. I had them, gave them all the opportunity, and as the first 8 people that volunteered. So you got brand new agents all the way up to veterans. But in there, it gives you the story of how I got to where I am. So it's good for investors too. I would say grab that book on Amazon, or if you want to get the quick version, go to globalinvestoragent.com website. Just click on the Learn More button, and Beverly will set you up with a call. I speak to everybody personally myself directly. I know it sounds odd, but that's just the way I do my business. I don't farm things out. I don't have a staff of 100 coaches. You actually get to work with me. And so that first call is a way for me to figure out where you are, where you want to go, and then give you some options. And you don't have to spend a lot of money. Actually, most of it actually is free. It doesn't cost you a dime. It's only when you really want to get aggressive that you got to you got to pay for some time there. But just start there, globalinvestoragent.com. Click on the Learn More button, and let's have a conversation,
Excellent. Thank you so much, Gary. Really appreciate it.
You're welcome, Dave. It's a pleasure. Let me know how I can help and serve others more.